Hi, it's Adam from Dodjit.com. What I want to do in this video is I'm going to focus on the Forex market. I just want to explain what's been going on over the last couple of days because we've been receiving quite a lot of economic information. The Bank of England came out, they slashed their rates by 0.5%. The ECB, the European Central Bank, stated that they're not reducing their rates this time round, but they are going to see what's happening. They're going to continue to monitor the economy. And if they will be required to, so they will reduce their rates accordingly. Now, in addition, on Friday, unemployment data in the US shocked investors completely. The unemployment rate came out at 7.6, while the NFP result came out at 598,000, which is really, really high. Now, funny enough, what happened on the US market was that stocks rallied. They closed the session high. They closed up by over 2.5%. So what does that really mean for us? First of all, let's see why stocks rallied. First of all, Democrats and Republicans, they managed to come to some type of agreement regarding the original stimulus plan. And I think what's happening now is investors are pushing aside all this economic data and they're focusing on this plan. They want to see if it's going to go through, if it's going to pass the Senate. As we know, it's going to be voted at the Senate this week. So we're going to have to keep a close eye out on that. What does it mean when we're analysing the charts, and what does it mean technically? What we're going to do is we're going to just go over a few charts now. We're going to show you different positions that we're thinking of taking according to developments of what's going to happen in the market. As you all know, the Senate is meant to approve the stimulus plan that the Republicans and Democrats, they agreed on Friday. So we're going to just really have to take a close look at what's going to go on, how the charts are going to develop, because most of them are trading at the moment at very, very critical turning points, as we like to put it. If we just go over to the first chart, the euro against the US dollar, we can actually see that after finding support around the 128 area, it started to head higher on Friday, despite the bad news from the US, but it managed to hit resistance. It couldn't break resistance on Friday. If we look just like that, this resistance level around here, the trend line resistance. So this is a trade that we're actually looking at. In addition, we've got resistance roughly around here. So what I want it to do is I want it to break higher. I want it to break all of this area, this clutter around here, and to continue higher. If I can see a clear break, so then obviously we're going to take the trade long. If not, so then what we're going to continue to be doing is working on this consolidation area. The next chart, what I want to show you guys, is the US dollar against the Japanese yen. This is an amazing chart. After forming a type of double bottom due to this long candlestick, this long shadow below this red candle, if we just plot a support level around here, we can see kind of double top. We also had support roughly around here. We rallied higher Thursday and Friday. Now on Friday we received a follow through candle, which is quite positive. If we look in addition, we can see that we've got this trend line that's been broken. So things do look good for the dollar against the Japanese yen. If you're in the trade already, so I would think about minimizing the position slightly. If we just open an RSI on the chart, let's just bring that out for a second. I like to use the 14. If we just look at the RSI, we can see that it's starting to become a little bit overbought compared to previous levels. You can see here it made a slight correction, and now we've reached the same type of level. If you're thinking to enter the trade on long term, so then I would look for a pullback. I wouldn't enter right now. Even if we do receive a bullish candle on Monday, I normally tend to look for pullbacks and then enter on the pullback using Fibonacci or something like that. Alright. Next chart is the pound against the US dollar. Now, despite all the bad economic data that's coming out in the UK, and we do know that they are in one of their worst recessions since I don't know when, the pound is rallying, which means the following. Number one, all the previous monetary reductions, interest rate reductions, are starting to have an effect on the economy. They're starting to leak through the financial system. And number two, in addition to that, investors are starting to believe that we might be coming close to an end of all these rate cuts. So, those are two things that we're going to have to take into consideration. From a technical point of view, what we're looking at is we can see that all week it rallied higher, the pound rallied higher, broke through this resistance level, just continued higher, and now it's coming up to another resistance line, or it actually touched it on Friday. What I am expecting, I'm expecting a kind of bounce off of that level, especially as the RSI is becoming slightly overbought. We could start to consolidate around this area. Again, what we're going to have to do is we're going to have to wait to see what the developments are going to be in the US, and according to that, we might take a position. Now, the last chart that I want to show you guys is the US dollar against the Canadian dollar. On Friday, unemployment data from Canada showed a horrifying result of 7.2%. They're slightly lagging behind the US. From a technical point of view, what we're looking is like this. First of all, we're approaching now trend line support. So that's something we're going to have to take into consideration. In addition, for longer term trades, what we're looking at the moment is we're starting to form this kind of triangle pattern. Just look carefully, just like that. So short-term traders, they can work on the range. Obviously, we're talking about a range of 1.20 to 1.26 roughly. For longer-term traders, I would look for a breakout in either direction. We're going to have to see, again, how things are going to develop in the US, and according to that, we're going to take up positions. So this is Adam from Dodjit.com, and we'll keep you posted.